Okay, let's fucking move! Let's go. What is going on, everybody? It is Jordan with the Futurist group today. TP is over here in the background. He still is present, but today is what? Teaching tape 4? Teaching tape number 4?
Oh,
Number 4 today. All right, we are going to go more in depth on our confirmations and go a little bit into continuations. Next week, we will get you with some psychology videos too to help you really put together all that's needed to trade, and along with risk management, things like that. Please be sure to like and subscribe, hit that noti, and it means a lot to us. Really, we do a lot of work to get these videos out to you guys. You know, we really just want to see that we're really just making a difference. All right, so let's just get right into it. So, confirmations, we didn't really give a clear definition on what confirmations were in the last teaching tape. And confirmations are patterns in the market that may signal a reversal or shift in trend. Okay, and we usually look for these confirmations on the 5 to 15 minute. They could be on higher time frames, and that is stronger, of course. Higher time frames hold higher power at all times. Like all times, doesn't matter. And we are going to get right into break of structure here, which is when price closes below a low slash above a high, depending on the current trend. So we do have an example of an uptrend being broken here. As you see, we have a higher highs and higher lows, and then boom, we have a higher high, but then price closes below that high. So that break is right there, and a good continuation that we do play off of, especially when it comes to liquidity sweeps, it would be an order block. We aren't really going to get into that right now, but we will get into that in the future because that is a really useful continuation. And we also do have an example of a broken downtrend. As you can see, we're in a downtrend. Lower highs, lower lows. We have the break here because price closed above this. It has to close to be a break, always. That does also go for the 79th extension. It has to close above or below that 79 or 21 mark. All right, and then we are going to get right into the SMT divergence now too, which is when one index, for example, we are going to use, for example, if the S&P 500 makes a higher high or a lower low, while NQ makes a lower high or a higher low, this shows that the ES is lagging and may reverse. And you could switch ES and NQ in any situation.
very interchangeable.
Right here, you can switch it.
Switch it right here?
Switch it.
Dang.
But if you're switching it, you'll have to switch this one to whatever.
It doesn't matter which one is
It's
lagging.
variable.
They're going to react the same way no matter what. It's just about the difference in movement that matters.
We do have a couple examples here. We do see an uptrend coming, and you see ES continuing this uptrend here. But if you look on NQ, you see the NQ makes a lower high, which is basically telling you that ES, because these are correlated indexes. So this is telling you that the ES would likely want to come down, of course, following a continuation and whatnot. And then this is a downtrend example. ES is coming down, but this is also NQ for the lagging index. So yeah, ES is coming down, and it ends up making a higher low. And what that basically means is that since NQ continue the trend, that may lead us to believe that NQ wants to reverse the trend. Okay, and the symbol is variable. These symbols can be interchanged in just between the two since they are correlated indexes. We are going to do a little cut here.
Wow! Look at all this amazing information that we put out there on the board just by doing some simple magic. And so, yeah, these are the other two confirmations that we have, sort of. There's a little bit more that we will get into right here.
The fair value guys.
So the 79 extension, the 79% extension on the Fibonacci retracement tool, which you'll probably find it's one of a bunch of lines. Me personally, I would look up TJR's Fibonacci settings to get the right ones because that's what I use and it works great. But it's similar to you will draw lines or a box or this box of lines, I guess, from a high to a low, and it will have these certain percentages or ratios marked out, depending on which ones you choose. And a good one is the 21% or 79%, because if a market, if there's a high and low, and that's the 100%, just like this, the 100%, and it closes below this 21% line, closes, you have to make sure it closes. In an uptrend, if it closes below, then that can be considered a break of structure. It can be considered a confirmation. And so that signifies that there could be a reversal of the current trend. And again, there's continuations that we will use for strength on this, and we will get into that, trust me. We also have it in the downtrend here. And so we have it basically, again, the 79% line is marked out between the high and low. And we closed up here, so it's possible that we have a shift in trend structure. Okay, and that's how we're going to get into our next tool that we use. And this tool is a fair value gap, or an imbalance in market structure and in liquidity. And so this tool is very unique because it's actually a continuation and a confirmation as well, but it depends on how market reacts to it. And we keep throwing that word continuation out. What does that mean? And so, the candlestick structure with the market, we have it's a three candlestick pattern where there's a gap between the wicks. It has to be wickish, not close, but a gap between the wicks, and there's some space in the middle here with no wicks at all. And this shows that market didn't even lag, it didn't even hesitate, it flew right through basically this value, this dollar amount. And so market would like to come and retrace into here, into these zones, these fair value gaps. We'll mark them out, and
it will fill orders within this zone to continue going in its continued trend. That's why it's called a continuation. It's a good point where price will seek to continue going in its trend.
And we'll get more into that in another video. Of course, we'll go over all the continuations.
A big thing with these imbalances here, just like every other confluence, higher time frame holds higher power.
Oh, of course.
And that is so big with these imbalances here, and it's so big with this here. Okay, so
of course. And then yes, with these gaps, they can either be respected or disrespected. And another word for disrespect is inverse in this case. So respect would be it taps into this gap and goes out. It can even go in and shuffle in here, but as long as it doesn't close below this line. And remember, closure is a big thing with confirmations. If it doesn't close below here, as in these dark lines, it is a respected gap, and market will likely
continue
go into that trend. But if we go, say here, and we close right here, we have a
huge move,
a big gap, and we close past this gap. This is called an inverse fair value gap. This disrespected that gap. And this showed that this level of price actually reacts the other way. It's just, I don't know what happened the first time.
And this is where I come back to these time frames. And also, you must look for that. You need to make sure that there's no other imbalances within the trend that you're trying to disrespect.
Yes.
And a way that I do that is I just drop the time frame back. I just drop back to the 15 minutes, see if there's anything in there. If I see a lot of bearish coming down, but not really too much imbalance on the 5 minute, I'll go to the 15 minute. I'll mark out whatever imbalance may be on there. And that's really what your target should be to inverse if you're looking for confirmation to reverse.
Of course.
But usually with these gaps, you're looking for continuation after signs of reversal have already shown.
Of course. And so the continuation will be our next video, and that's how to really execute properly, be more confident, have a strong understanding of where market's going to go. But inverse fair value gap, when price disrespects an imbalance showing potential reversal / shift in trend, that's to a T what we've been saying.
Yeah, but also in the next video with continuations, we are going to be introducing a new confluence, two confluences, And that is going to be EQ and an order block.
Wow, that's
Okay?
a lot. That is a lot. There's a couple. Wow, there's some confluence.
And also, we are going to learn in that next video how we can use EQ with an imbalance to create a really strong draw for continuation.
EQ stands for equilibrium, by the way.
Yeah, kind of like calculus.
Just to give you some more,
Something like that.
just like calc for calculator. Yes. Just to give you more of an idea of what it is. But we will go over all of it. Trust me. If you feel behind,
And if you have
comment.
questions,
Yes, if
please.
you feel behind, ask questions, comment, and if you trust us, we will get there. We will answer questions. We will be there to
help you on your journey.
help
That's
you,
what
to
we're
give
here
you
for.
all the knowledge we have. We will be here making videos, answering questions, answering DMs, anything. Trust us, we're here. We want to have a positive impact on everyone's life.
That's what we're really doing this for.
Truly. And so yeah, these are ways that we can show that market may be reversing the current trend. And these are very, very useful, extremely useful. This is basically step one to the process of finding a good entry in our gated strategy. So yeah, I think that's it. If there is anything we haven't gone over yet, again, comment. Make sure to like, subscribe, hit the notification so you see more videos. The next teaching tape we will drop every other day. Teaching tapes drop. Well, I pledge right now. Every other day we will have a teaching tape drop until the series is finished.
Hell yeah.
We will stay consistent.
For you guys.
We will show you with that consistency that it is a display of what it takes for trading. You know, you need to have a mentor you can trust. So we will keep up on it. We have busy lives. This is actually quite the commitment. A lot more than you would think it is.
Yeah.
All right.
All right. Well. Yeah.
Yeah. Give it to market. Give it to.
I'm outside, they wanna know